Greetings, Dr. Jeffrey Scott here. This is my weekend market update for October 1st, 2023. My email address here is hgsidoc@gmail.com. If you're new to my channel, I'm almost to a thousand followers, so just click on the subscribe button, hit the alarm so you know when I post these, and I'd really appreciate it. In the remarks section, I'm going to put some links, especially the link to the upcoming Wealth 365 event, which I'll mention in a second. Will government shutdown neutralize upcoming seasonal tailwinds? Well, October, although there's been some really major corrections that have occurred in October, it's actually typically a strong month. And so, from a seasonality perspective, typically the cyclical market bottoms the first week of October. Yet, we've got some big news that could go against us, which is the shutdown, which everybody's well aware of. This is for education purposes only. Anything else I recommend should be taken in the spirit of education and not considered investment advice. I am a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are responsible for any investment decisions that you make. I mentioned the Wealth 365 event. I think there's quarterly. I think they're the best opportunities to hear from smart people 6 days in a row. This will be October 9th to the 14th. I believe I am on Tuesday. Uh, and it's just for me, it's an honor to speak there. I don't do this for a living. I am a healthcare technology entrepreneur, I guess you could say. But I love trading and I love teaching people how to trade. But there's so many people there, opportunities to subscribe to wealth charts at the best price of the year, as well as lots of other opportunities for new stuff. Major markets, I always look at what happened with the major indices in yellow. And you could see on Friday it was a mixed day with Dow, NYSE, S&P down quite a bit, around 1.4 on the Dow, leading to the downside, while the NASDAQ composite and the Russell were all flat to a little bit positive. So that would be on the week. And on Friday, you could see it's actually interesting. Friday looks a lot like the week performance, except on the Russell, which was down 0.5%. Not a strong end of the week, lots of red there. What's also interesting to me is we're about to lap the 52-week lows, but you could see this is the move we've had off of those lows. So there's been a dramatic move, especially in the Qs at 40.9 and the NASDAQ composite at 31%. And the laggard Russell still up 8.8%. So when people talk about going back and testing those October lows, it would be devastating when you see how far we've come from there. I'm not talking about that. If you look at the S&P sector ETFs, you could see that the laggard off the bottom is utilities and real estate. And you could see the moves on the week. And on the week, energy, materials, and discretionary. Note, none of those are defensive. We're leading. I think energy leading is not necessarily the best thing for the market. It reflects the high cost of oil. When I look at the Q Edge tool, I get a sense of what's going on in the market. So on Friday, you could see it was not a negative day despite the indices being mixed. Um, yes, excuse me, not a positive day despite the indices being mixed. You can see 45% of the sectors were up, only 38% of industries, and 37% of stocks. So definitely a tilt to the negative. 80% of the stocks in the S&P 1500 are below their Bollinger Band. And when you look at where the stocks are living, most are living below that midline, although very few are below the lower Bollinger Band. When you look at one day ago on Thursday, you could see a much different performance with the vast majority of sectors, industry groups, and stocks up. And in fact, when you look at the 5 days, it's you start to get to that 50-50 type of a week. On the week, half the sectors were up, 43% of the industry groups, and half the stocks. So yes, the markets were down, especially the non-NASDAQ and Russell indices, the NYSE and the S&P 500, but it was a relatively neutral week. Now you compare that with the last 10 days, which is far from neutral. So that was actually an improvement, or the last 30 days. Now this is the Q market breadth tools. Now I talked a lot about the Hindenburgs. I'm not going to review them, but at least on the Q market breadth, which is more of a composite, not the NYSE, you could see that you had the confirmed Hindenburg omens back here at, not the top, but just off the intermediary top. And no shocker, they predicted the fall, and we got that. When we look at, again, the performance was mixed on Friday. We already looked at this. We can go forward. Now, to me, oil is a big problem, but so is this. The 10-year, excuse me, and the 30-year going almost straight up, and you could see going straight down is the S&P 500. Is a recession coming? I remain in the not now category. Yes, whenever you've had the yield inversion and you go below the center line, this is the 10 minus 2, this is the 10 minus 3. The gray bar reflects recessions. You expect to see a recession when the Fed starts cutting rates, which is why they'll start cutting rates. But if you look at credit risk, yeah, it's off the lows, but it's not spiking. And interestingly, the Philadelphia diffusion index, so sort of the economic activity is actually rising, which would go against having a recession. Breadth on the short term, the 21-21, the 12-week or 13-week new high, new lows actually bounced. We pointed this out last week where I thought we'd see a bounce there. Didn't really do much on the indices though, disappointingly. Stocks above the 200, stocks above the 40 were mixed, maybe a little bit better, but not much. The buckets, again, this is an edge rater versus the Q. The majority of the stocks in the S&P 1500 are trading below the midline in their Bollinger Bands. That's bearish, but we're not seeing a buildup at the less than zero or below the bands, which would tell us a reversal was imminent. Now, I wouldn't expect to see any more Hindis for a while. These were the signals here on the NYSE. 3 of them fired on Edge Raider, which actually is why I did the special report, I think, on the 13th about the impact of the Hindenburg Omen. Notice the persistency in pink or whatever color we want to make that of new lows. At least on the NYSE, occasionally get new highs. So the market's still under a lot of pressure. If we're going to see a market recovery, we're going to have to see new highs coming back, not just new lows. Now, I mentioned that the market was better this week than last. In fact, if you look at the ERG report, which looks at every stock in the HDSI universe, 11,000, give or take, and it looks at how they perform based upon EPS rank, relative strength rank, and group rank. And the high ERG, high growth here, the low growth here, and you could see that the majority of the curve is above zero or at or above zero. So a flat week, not a very negative week. There are some periods of strength. I throw out the tail and the head because the number of stocks there is small. And then when I look down here, was there a pattern where EPS rank mattered? No. I hate to see the low relative strength stocks outperforming. That's more market rotation. But that this perhaps is a better look. I have a lot of different lists I either create, download, scans, filters, etc. And I look at all of them, how they performed their picks over 5 days. And that's not a negative picture. That's at worst case a 50-50, probably a little bit better than 50-50. So perhaps the broader markets are better than the indexes. No rest for the weary. There's plenty of news this week, whether it's PMIs and manufacturing on Monday, job openings on Tuesday, ADP and PMI factory orders ISM on Wednesday, jobless claims on Thursday, and the monthly unemployment report on Friday. I think the market's going to be looking. I think we need Goldilocks. If they're weak numbers, you'll get economic concern, especially with the shutdown. And if they're super strong numbers, people will be concerned that it's going to perhaps push the Fed a little bit for their November, which is the next meeting. On the right, you can look at, there are some earnings this coming week, not many. And as I put down below, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is scheduled. Now, we're going to look at my market timing model in a couple of moments, and it's going to be negative. So people ask me all the time, well, when do I get more interested in buying? Do I wait for a weekly model to turn positive? Not necessarily. I think I have a high level timing model, which we'll look at, And then on the shorter term, I have my own convictions. And what will get me more convicted to go long is what O'Neill described in How to Make Money in Stocks as a follow through day. And a follow through day, it should feel like an explosive rally, strong, decisive, and conclusive. It should be up at least 1%, and the market volume should be above average and certainly above the prior's day. So you get an attempted rally, which we got last week, but most of those are probably going to fail. And now you look for that follow through day. So a 1% move, higher volume, more than the average daily volume. That follow through day, at least if you're a cancel in person or follow O'Neill, is a signal to go long. So market settled mixed, as I showed you. Um, it certainly feels like we're due for a bounce, but with the interest rates, the dollar, oil, and a Fed shutdown, I wouldn't count on anything being guaranteed. Rates continue to go higher. I mentioned the shutdown. The data this week, especially the PCE, was considered to be favorable. Seasonality, as I mentioned, starts to get better. Again, the triple play of oil, dollar, rates, the concern. I still kept keeping cash on the sidelines. I've had pilot trades, so small trades, tight stops. If I get that O'Neill type follow through day, I'll get much longer in this market. And again, just to remind you, I've got my Wealth 365 event coming up. Just look underneath in the comment section and you'll see the link. You don't have to write it down so that you can register and look. I get nothing if you register. I don't get paid for speaking there. I do have something, my tools that I sell, but you don't have to buy anything if you go there. But since I don't really keep a mailing list, I don't bombard you with invites. If you did use my link, I'd certainly appreciate it. At least I could show them that I'm trying to drive attendance so I can keep being invited. So, speaking of Wealth 365 and wealth charts, let's go take a look at the charts and see what we can see for this week coming up, the first week of October. And as I've mentioned a couple times, typically when we see the cycle lows. So let's start out and look at the day that was on Friday. So started promising with a big gap up. And then, of course, it didn't last that way. And sometime after 11 o'clock, we sold off, tried to rally, and formed a close here that you could see is down on the session and below where it closed on Thursday. When we look at the spider, you could see that candle. So it's a red candle, minimal bottoming tail, down on the session, not down a lot, but definitely down on the session. As we've already talked about, it was down 0.24. When we look at the other major indices, now notice we broke out of the triangle, came down to, but did not touch the 420, the 200s right below it. You don't have to be exact. That certainly would be enough for me, but I don't like Friday's candle. I thought we had a reversal there. If we look at the NASDAQ, it's broken down the 50 as did the S&P. It undercut the prior low and rallied, but here it had a stalling day, up 0.07, but well off the highs. The diamonds on Friday pulled right down to that anchored VWAP from the 21-22 highs and bounced. Problem is, even though it opened up higher on Friday, it came back down to that support level. So all of them still look to me that they could be at a relatively good place to bounce. Considering the cycle lows that are upon us, I can see why you could have optimism. Then we have the Fed shutdown, which is probably going to ruin everything. The white line here on the Russell is the January lows. We didn't come down to take it out, but we certainly look like we're potentially putting in a bottoming here. But then again, Friday after opening up and giving us some optimism, closed down nearly a half a point. You could see the VIX came down the last couple of days and then had a reversal on Friday, closing up 1%. Looking at the weekly on the VIX, you could see on the weekly it was up 1.86% on a $16 VIX. That's not a big move. So the offenders on the week would be the dollar, and you could see a gap up and a big move higher on the week. It was up 0.68%, but you do see a reversal candle with a topping tail, and you could see the reversal here. So it'll be interesting to see if the dollar has peaked, or is this just a short-term respite? Until I see more, I'm going to call it a respite, because now I can sort of draw this line in here and see if we take out and go higher. So I'd love for the dollar to be done going up. I'd rather be long this market than sitting in cash, but I'm not going to buy it until I see the dollar, the 10-year oil start to behave, or at least see that follow through day. On commodities, strong dollar, you'd expect gold to be weak, and it just sold off hard, down over 1%. Look at silver, you'll see the same thing, down 1.93, and look how many bars, 1, 2, 3 bars engulfed by that bearish candle. Oil, kind of like the dollar, putting in a flag here. Let's see if it can break out. A breakdown below this line would be great. Natural gas has done nothing, so we're not going to talk about it. And again, if you want to be optimistic, you look at the weekly on the 10-year. You can see, like the dollar, a breakout, a gap, but a reversal and close in the middle. So not necessarily the most bullish appearing candle after that gap. And you could see, even on the daily, a bit of a shooting star here on Thursday, followed by a higher close in the open, a green candle with a little bottoming tail, but down 0.52. So it's hard to believe that with the dollar weak on Friday, the 10-year easing on Friday, oil not gapping up and going higher on Friday, that the markets didn't finish stronger. But I suspect that is a symptom of the shutdown. Interesting stuff. All right, let's go on to my timing model. So for those who've never been here before, I look at two different things. I look at, on my timing model, I look at price above a 30-period WMA, and I look at a not secret, but because we give out the formula from time to time, a relatively proprietary indicator that I developed with some friends called the bongo. It's a weekly time frame, so I need price above the moving average and the weekly bongo to be green to be in a buy, price below the average, a weekly bongo to be red to be in a sell, and I need, if they're mixed, I'll give you a yield sign. So what do we have here? Well, it's different, and you can see that I just changed these things from the last time I presented. We are below price, and the weekly bongo is red on the spider, so spider's in a sell. The Qs have broken down and failed to retest is in a sell. The Russell's been in a sell, and the diamonds are now in a sell. So it's hard for me in this setting to go all in on the market. Yes, the Qs are close. Yes, we are going to bottom soon cyclically, and we could see a rally, and maybe I'll come back in then. All that stuff is true. But do I see it right now? No, I don't see it right now. So I have to be cautious. Earliest time I want to start committing funds, except for small pilots, will be that follow through day. And then as the market starts to switch to green arrows, I will get longer. If I look at, one of the breadth things I like to look at, let's just look at it right now, is the spider versus TLT. Because if we have a recession, this thing's going to spike. And it's not spiking. So again, I don't think a recession's imminent, but it's something I look at. And I'm not sure what it's telling me, except it's a change. This line here have flattened to turned up. So that's telling me that the broader spider and the broader Qs are not horribly underperforming the cap weighted, which they were on the way down. We look at the hourly S&P 500 sectors, which is sort of a short-term vehicle for figuring out what works in the market. And so what do I see? Materials, no. Communications have been strong. They weakened a little bit on Friday, as did energy. Financials have come down. Industrials eased a little bit. Technology poking its head up. That's kind of interesting, but it's still been off for a while. Staples, utilities, real estate, all turned up a little bit on Friday, which is a defensive signal. Don't like that if I'm very long. Discretionary is holding up as well as staples. Healthcare versus spiders came off of its highs. And if you look at biotech, you could see that biotech is just really not doing well. So I look at this. Who's my winners? I haven't put my arrows out for the star up because I'm doing this so early because I've got plans. Um, it's a tough market, and this is compared to the spider. So even if everything's down, you'll have things that are doing better than the spider than not. And I guess the ones that are doing better are the staples, real estate, and utilities on the short term, which is defensive and concerning. Stock scanners, let's look at the heat map. Let's look at the S&P 500, which I can comprehend much more than 2,000. So this will reflect after hours, but you could see big cap tech did not do horribly. Remember, XLK was actually one that was turning up. Nvidia was up less than 1%. Tesla was up over 1%. Apple up a tad, a little bit less than 1% on Microsoft. Amazon up 0.6%. But overall, in the S&P 500, it was a mixed day. If I look at the wealth scanner, looking at what's outperforming in the market, and this is really depressing. Nothing's at 800 or above. The max you'll get is 850. The first thing here is short the bonds. This goes up in times of a tough market. Then you have SARK, which goes up when ARKK is weak. And as we talked about last week, it was going to get pressured by that 200. Then you got the SQQQ, which goes up when the Qs are weak. It is really tough to get excited to the long side here. Now, if I flip the narrative and I look at the bearish stocks, and I'm going to have to flip the ranking in a second when it gets done. Let me let it finish its work. And I look at what's lagging, come back, dividend stocks, financials, the diamonds, healthcare, utilities, pharma. So a lot of the usual players and suspects are on the laggard side. So right now, why aren't I knock the doors down all into the downside? Because we're sitting on at or near support, at least on the diamonds and the spiders. The Qs look like they're trying to reverse, as does the Russell. So right now, I think it's hard for me to commit to the short side. Now, what about the long side? Well, this list doesn't give me a whole lot of attractive looking industry groups, and maybe I'll throw up let's look at the Russell 1000, the large cap, and see what stocks come up as leaders. So Acuity Brands broke above the 200. That's great, but I don't like the shooting star. Mobileye, an IPO, I'd have to see about has broken above the 200. This is probably one of the leading IPOs right now in the market. So there are some stocks here. CCCS is one that is a true leader, but its high-low jumps at 100. It's probably had a chance to run. It gave us some signals back here, but wouldn't have liked that topping candle there. But this one's breaking out and running. Jabil Circuits is another one that looks like some earnings news. Let's see what it says here. 5% beat, 245 versus 232. So there are some individual stocks that look good. Now, what I'm looking at here are stocks that are leading. Now, stocks that are leading are great to look at, but the problem with stocks that are leading is they may not be at good buy points. So what I like to do is I like to go into my CAT scanner, and since I'm going to stick to the long narrative, let's just run the CAT scanner on my combo leaders list. Now, Blue Apron, this is a stock that's had not the best historical past as far as performance. Had a major, looks like a major gap up there. Now, when I see that, I worry about was there a split? So I would do your research. I can tell you that it's got the same price on TradeStation I checked that when I saw that. So again, that could be a split, but it looks like a big gap. Volume was massive, breakout momentum. I those typically are going to base for or go sideways for a while and consolidate before they take off again. I'm just looking at the list. Trimble, don't like the topping tail. I love the gap up. I don't like where it closed. And I really wish I could tell you there were some great opportunities in the market. I don't see a lot. And when I don't see a lot, and the market's soft, that sort of fits it. Here's one, DHT, it pays a dividend. It's shipping, if I remember correctly. It's got volume. It's broken out. Um, Relative strength in OBV. Is it that exciting? No. So the first thing I'm going to tell you is I looked at a lot of charts. Are there charts that look okay? Sure. ZS looked interesting, but it's still got this recent overhead supply to take out the 17-day relative strength in OBV looked good. It's not great. XPEV, a Chinese EV, breakout momentum, relative strength OBV. Recent flip of the bongo took out the 50 and the 17 and new well signal. That looks good, but look how far this thing has fallen. None of these break out and say buy, buy, buy. So I create a list of high relative strength stocks, sort of the O'Neillian type of growth stocks, and it's called the JAS Weekly High RS Leader. So I might check there. GBDC, Golub Capital. Now, I don't know this from Adam. I don't know what kind of dividend they pay, although I suspect that they do. But I like the pattern, a big gap up here, trade down to the 50, and now a breakout on volume, massive volume with breakout momentum from a squeeze. Relative strength and OBV look good, so GBDC is definitely interesting to me. Probably are the ones I've showed you. Here's DHT and ZS. We already talked about them. CrowdStrike is another one. I don't like the candle from Friday coming out of a squeeze, but I'm going to certainly watch that one. And now we start to lower in signals. Frontline is in the same group as DHT. So that's my relative strength leaders. That's not very exciting. Well, how about stocks that I thought through various means were interesting and I put them on my buy list? The reason why I'm going through these lists is because from a top-down perspective in the broader market, there's not a lot for me to show you. Gentex Corporation, I would like to see it move up from here, optimally take out this 33.19, but volume, breakout momentum, relative strength at OBV, that's why it's on my list. I can't believe Groupon's on my list, but what a beautiful chart. Sometimes I wish I just could take off the names because I have in my mind preconceived thoughts based upon the name. Are we in an uptrend? Absolutely. Take a look at the weekly going back through June, major move. Massive volume on Friday. Relative strength and OBV look good. It's a great looking chart. There's XPEV, there's Zscaler, Celestica. I think this is a contract semiconductor manufacturer. Um, this one's starting to move as well. It's already moved up off the lows. Think of all the stocks that start up on the upper left and end on the lower right and then move up. This is a stock that's been in a big move, and we're going back to 2022 there. That's a super strong. Don't remember what Concentrix does. Don't like it because it's well below the 200. We looked at CrowdStrike. Constellium, this one made my list. Pullback, facing, breaking out here. Don't like where it closed. This is just a watch list. It's not everything I'm buying. Then Jabil Circuit, which is funny. I saw their factory when I was at the Albuquerque airport coming home from Santa Fe a couple weeks ago. Not a beautiful move on Thursday, but look where that high low is at 100. So how many great looking patterns did I show you? That's the problem with this market. There's not a lot of standouts that are saying buy me, buy me, buy me now. DHT I like, Groupon I like, XPAV, ZS, CrowdStrike. So there's a number that are at decent positions. And when I say I take a pilot position, it means I might buy some calls, risk $1,000, maybe at the most $2,000, which limits my upside. But It allows me to play the market, take advantage of if we get a rally this week, which I think we may, but it doesn't put a lot of risk and dent my portfolio. Have an awesome week in the markets, and please click the link and sign up for the Wealth 365 event. Thank you.